What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Seng index with the ticker symbol HSI. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here you can see that we have the daily chart for the Seng index. There was a very large impulse up. I'm going to draw that right now, and you clearly see that after this uptrend, which found resistance at the prior resistance at the 22,476 level, prices sold off in the form of two attempts down, or two legs down. So this was the first large leg down, and then prices pull back, and it's trying to reach the second leg right here, which is targeting the 16,960 level. It could fail and we could see higher prices, but there's a good chance it's probably gonna be met because of the bearish bias on this chart. So we'll see if it can be reached. There was this prior support that was broken, but just because we broke it doesn't mean it automatically turns into resistance. You can clearly see that prices are still, coming back up to test it. So right now, if we find resistance, we could sell off back down to lows. If we just see prices continue to push up higher and we see a reversal pattern, meaning a couple attempts to go down, it could fail and we can see higher prices. So right now, the measurement target is still in play. We can still find resistance and sell off. But if we see, large aggressive buying, and then we see a pullback that holds above this prior support, that can lead to much higher prices. So that's how I'm looking at HSI on the daily chart. Basically, since we had this large uptrend, this all just could be a correction for another large uptrend. However, if we zoom out a little bit more, you can clearly see that there's a very large downward bias to this chart, and the measurement target is still in place. So we have to understand what the market participants are doing. You can clearly see that the bulls are trying to get prices to stay above this $19,000 level, but the bears are trying to keep prices below it and reach the measurement target at the high $16,000 level, low $17,000 level. So understand what the market participants are doing and probably who has a slightly higher edge. It probably is the bears because of this previous downward bias, but we'll see how it turns out. It's not guaranteed, and this could be a failure to reach the measurement target and see higher prices, especially because prices did break out of that support, and also there was a breakout of this little range right here. So prices could be, coming back and seeing a V bottom reversal, meaning if we went down really quick, we could see a reversal really quick too. So right now, what is it setting up to do? It's actually setting up to do something pretty bullish, which means a failure to reach the measurement target, because we're seeing a nice reversal take place. But again, it's not guaranteed. We can still find resistance and go down lower. So that's all I have for HSI on the daily chart. Let's take a look at the weekly chart to wrap it all up. So here we have the weekly chart for HSI, and you clearly see there was this downtrend pattern in play. So prices are making lower lows, lower highs, and then all of a sudden we saw an overshoot of the channel, which could lead to a reversal, but it's not guaranteed. So this was a nice double bottom right here on the bottom side of the channel. Prices send prices to the opposite side. Then all of a sudden this was an overshoot because it's outside of the channel and is very overextended from the EMA. So this was clearly an overshoot, and this was the largest impulse up in this entire downtrend, which only occurred after the overshoot. So since we just saw a downtrend break, prices will make two attempts down. So this is the first attempt down, and this looks to be the second and last attempt down. It could fail because there was this prior support in the way right at this again 19,000 level, 19,200 on the weekly chart, and resistance right about here at the 22,200 to 400 level. So again, this is what the market participants are doing. Sellers are trying to make a new low of this downtrend in the form of two attempts, because market moves in attempts, not guarantees. But the bulls are trying to come back up to this prior high right here in the form of two attempts. So we saw one attempt from the bulls, so we could see the second attempt start right here. So when the bulls have a successful second attempt, that means the bears' second attempt was unsuccessful. So if we see prices, start trending up, that means the bears on their second attempt failed to reach the target, the measurement target, and the bulls are successful in retracing up higher. So we'll see what occurs. But if we start seeing aggressive buying and prices stay above this 19,200, 300 level, like we see a reversal pattern, there's a good chance we probably see another large leg up. So is there a pattern in the past that's similar to this? Yes, there is. If I go back in time to a previous bear market, this one right here, you can clearly see that there's something very similar situation going on. There was this downtrend right here. Again, it's not fitting the best, but this channel kind of depicts that price drop. So it looks like there was also an overshoot right here. You see there was this overextension, and that led to the massive move up higher like we just saw. Then look at after the massive move up higher, even inside these two price levels that I have on the chart, these horizontal lines, it's kind of doing the same type of drop inside the same price levels too. So we saw one drop, two drops, sellers tried two attempts to come back to these prior lows, failed, and then the bull move occurred upwards. Again, this didn't lead to a complete bull market because prices were range bound, but you could clearly see that after the second attempt failed, we saw it move up higher. So same thing can occur right here. It's even within the same two price levels, these two horizontal lines. We have this downtrend, overextension, huge move up, two attempts down that could fail, and we can see another move up higher. And if let's just say we did fail, then there's a good chance we could see another move up higher, a measure move up higher to probably the 26,000 level, and maybe even start of a bull trend. So we'll see what occurs, but this is very exciting. It could be a failure, and it could lead to this move up higher. I'm just slightly not, I'm hesitant to say that we will. It's probably a 60-40 chance right now, 60% that we still go lower and reach the measurement target, 40% chance that was a failure and we see higher prices. But again, we'll see how this develops. So that's all I have for HSI on the daily and weekly charts. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.